Once upon a time, the American dream was simple. Buy a house, get the latest iPhone, drive a reliable car, and secure a bright future for your family. But today, that dream feels more like a distant memory. The housing market, once the foundation of wealth, has become a rigged game, one that favors the wealthy and leaves the rest of us struggling to keep up. So, what's the real move in this new age? Stay tuned as we dive into why buying Bitcoin might just be your best shot at reclaiming financial freedom. Let's get into it. The decline of the American dream. Back in the mid-20th century, owning a home was affordable for most Americans. A single income could comfortably buy a house, and a mortgage of 15 or 30 years was manageable. But things have changed dramatically. Today, in many parts of the U.S., a typical home costs 5.6 times the median household income, up from roughly 3 times in the early 2000s, and below 3 times in the 1980s and 1990s. In cities like San Francisco and San Jose, that ratio skyrockets to 8 to 12 times income, turning homeownership into an unattainable goal for many. This isn't just a matter of personal finance, it's a symptom of a broken economy. Wages have stagnated while housing prices have soared, driven by a flood of cheap money, low interest rates, and restricted housing supply. The Federal Reserve's quantitative easing policies, combined with a global trend of printing money to stimulate growth, have created a bubble where asset prices, including homes, are artificially inflated. How did we get here? The answer lies in a perfect storm of economic distortions. For decades, central banks have maintained artificially low interest rates, making borrowing cheap. This encouraged massive debt-fueled investments in real estate, pushing prices higher and higher. Meanwhile, governments have restricted new housing developments in many areas, limiting supply and further inflating prices. At the same time, wages have failed to keep pace with the cost of living. According to Harvard University, the median home price in the U.S. jumped from about 3 times median income in the early 2000s to over 5.6 times in 2022. For many, especially younger generations, owning a home has become a pipe dream. Instead of building wealth, they're stuck paying rent or making mortgage payments that eat up most of their income. The illusion of wealth in real estate. Many boomers cling to the notion that owning a house equates to financial security. Your greatest asset, they say. But the truth is more complicated. Real estate has morphed into a financial prison for the poor and a wealth-building machine for the already wealthy. It's no longer just shelter. It's become an investment vehicle for hedge funds, institutional investors, and asset managers. And the game is rigged. When you buy a home today, you're often paying a premium fueled by speculation, not genuine value. When prices go up, it's largely due to inflated demand driven by cheap money, not organic growth. When the market corrects, as it inevitably does, millions of homeowners face declining equity, rising mortgage payments, and the threat of foreclosure. The future looks like Japan. If you want a glimpse of what's coming, look no further than Japan. For years, Japan's population has been shrinking, and its housing market has been in decline. Today, over 14% of Japanese homes sit vacant, a record high. This is a direct consequence of low birth rates, aging demographics, and a declining population. The younger generation isn't buying homes. They're not getting married or having children. As a result, demand dries up, and many properties become worthless. This scenario isn't unique to Japan. Similar demographic trends are unfolding across Europe, South Korea, and even the United States. As the population declines or shifts, the demand for housing will diminish, prices will fall, and the illusion of wealth built on real estate will crumble. Why the traditional real estate model is unsustainable. The fundamental flaw in the traditional housing market is that it was designed for growth, for a rising population and expanding economy. When these elements stagnate or decline, the entire system begins to falter. When demand evaporates, prices fall, rental yields collapse, and homeowners are left holding assets that no longer appreciate. The wealth shift from assets to fiat. A key insight from market experts like Raoul Pal is that many people think of their homes as assets, but in reality, they're often just lifestyle investments. They rarely generate income and tend to cost money. Mortgage payments, property taxes, maintenance, repairs. If your house is your wealth, then it's more of a savings account for your lifestyle than a true investment. Meanwhile, fiat currencies like the US dollar are rapidly losing value due to inflation. When you hold wealth in dollars, you're effectively losing purchasing power. Your house may be worth more dollars, but in real terms, it's worth less. This phenomenon is known as dollar debasement, and it's why many savvy investors are shifting their focus away from traditional assets and towards something more durable: Bitcoin. Bitcoin, the digital gold and the new investment frontier. Bitcoin, often called digital gold, has emerged as a revolutionary store of value. Unlike real estate, which is illiquid, expensive to maintain, and vulnerable to economic downturns, Bitcoin is scarce, portable, and censorship-resistant. It's designed to increase in value over time with a 30% compound annual growth rate, CAGR, over the past decade. For investors, Bitcoin offers several compelling advantages: high growth potential, limited supply, ease of storage and transfer, no maintenance costs, the case of the landlord turning to Bitcoin. Even among real estate investors, there's a rising trend of selling rental properties and moving into Bitcoin. Take Alex Krognall, a professional soccer player who recently sold his rental property at $98,000 and reinvested the proceeds into Bitcoin. His reasoning? A better way to store and grow wealth. He points out that rental properties come with leaky toilets, insurance premiums, property taxes, and endless management headaches. Meanwhile, Bitcoin's appreciation and ease of holding make it a superior wealth-building tool. Fuck real estate, buy Bitcoin. So what's the takeaway? If you're still waiting to buy property, consider whether the game is truly rigged against you. The odds are stacked, and the deck is loaded in favor of those who already own real estate and assets. Meanwhile, the emerging paradigm suggests that Bitcoin, with its high growth, scarcity, and portability, is the smarter, more sustainable way to build wealth. Would you rather hold 3.88 Bitcoin or a median-priced house worth over $300,000? The choice seems clear. Bitcoin's trajectory points toward a future where digital assets become the primary store of value, while traditional assets like real estate may become increasingly volatile or even depreciate. The old model of wealth accumulation through homeownership is under threat. Demographic shifts, economic distortions, and inflation are eroding the foundation of the traditional real estate market. Meanwhile, Bitcoin offers a compelling alternative: a scarce, appreciating asset that can preserve and grow wealth in ways that real estate simply cannot. It's time to rethink the narrative. The question isn't should you buy Bitcoin, it's when you should start. The future belongs to those who embrace the digital age and recognize the limitations of the old system. As the saying goes, sometimes you gotta say, fuck real estate, and start investing in what's truly changing the game.